This event is hosted by Pairgap in partnership with JP Chase Home Lending Team. Our hope is that you walk away with not only helpful tools that can potentially increase your business, but that you walk away believing that collaboration can get you closer to accomplishing your personal and professional goals, because we can do so much more together.
Good evening, everyone. This is being recorded. Okay, we are very excited to be collaborating today with Nikki. So let's get a few things out of the way. Disclosures. The statements, views, and opinions that are being expressed during this event are those only. They're not endorsed by Chase, nor do they reflect on the opinions of any of the Chase employees that are here. So that one statement out. All of the home lending products that we are going to be discussing tonight, I apologize, I need to unmute more people. All of the home lending products that are subject to credit property approval, right? So rate, mortgage products, and conditions are subject to change without notice. Not all products are available in all states, including not all amounts are also available. Other restrictions apply, including limitations. All of the home lending products are offered by JP Chase NA.
But Nikki, you know, you and I have known each other a long time. We've been in this business a long time, as many of the other panelists have been as well. You know, if we were newer to the business, maybe a home buyer for the first time, and we were just reading the headlines, right? We might start to question whether this is a good time to buy, or what are some of the challenges? Can I overcome some of these challenges? So I'm going to ask you this question. Do you feel like this is a good time to buy?
Right now, particularly post-COVID, we're rebuilding our entire world, and we're rebuilding our American cities. And like the Rockefellers, they were able to get in from the beginning, and they were able to build generations of wealth. And we need to, you know, really focus and remember that real estate, or all the benefits that real estate provides. We understand now in this time that we're facing challenges, inflation, high interest rates, and high home prices. But we as professionals need to see the light at the end of the tunnel and remain motivated to keep our clients focused on the long-term goal of generational wealth. So we should be excited with our customers. We need to, you know, help them be excited, because this is how, and it's important that we communicate like this to our clients with excitement. As we recover from this economic and social impacts of COVID, you know, the pandemic is shine light on a lot of underlying problems, but it also gave a lot of people power, right? The power to make our own choices, the power to say what this new world is going to look like post-COVID, and we need to take advantage of this moment in time. So I'm excited about all that's happening in real estate, these new cities being built, old ones being rebuilt, a digital transformation is taking place. And, you know, if you don't get in, or if we don't get in now, in this once in a lifetime opportunity, I think, you know, I don't know. I think everyone should get in, because it's a once in a lifetime opportunity. So when you ask me if real estate, or if it's a good time to buy real estate, I say, hell yeah.
I always love your passion, and you know, and I share it. You know, I spend a lot of time speaking with colleagues, speaking with people in the business, speaking with the home buyers, and making sure that, like you said, we're all keep focusing on the light at the end of the tunnel. We've been through cycles like this. Many of us who've been around for a long time. We know what some of the challenges are, but we also know what some of the solutions might be, right? So let me talk about that with you just for a second. You talked about this being a once in a lifetime opportunity. What are you seeing in the market as an opportunity that Pairgap solves for? Who is it meant to help?
Pairgap is lowering the barrier for this new class of investors using a shared ownership model, because shared ownership helps to increase individual buying power and makes home ownership affordable for those who can't afford on their own. I retired from banking in 2019 to launch Pairgap because I wanted to do more to solve housing affordability, or the housing affordability problem that we were facing, using an entirely different strategy. I think that, you know, this idea of the American dream is changing, and we need to create, you know, more avenues or more products that fit today's home buyer. Now that millennials are the biggest generation, I think it's important to focus on the new home buyer. There's a major shift toward the sharing economy, and this industry needs some change in order to adapt to these new social behaviors. You know, we're sharing cars, we're sharing rides, clothes. It's only a matter of time where it kind of trickles into real estate. Personally, this idea of collaboration has always worked in my experience in life, whether it's getting together with partners to grow business like we're doing today, or joining a friend to purchase a property that I couldn't afford on my own. I found that I could reach my goals faster, you know, doing it with somebody than doing it by myself. This is a digital home buying experience that Pairgap creates, where we simplify the process and provide transparency on this co-ownership experience from start to finish. So we match, we facilitate, and de-risk the investment for co-buyers, which delivers, you know, opportunities for fractional ownership through our trusted process. So buyers are matched to each other based on an alignment of their shared buying power against their financial goals, neighborhood preferences, and living needs. And buyers can also co-own with family, friends, partners, or members of our network and platform. So this is, you know, like, we're in a digital age right now. So the goal, you know, a lot of people, younger people, don't want to go into the bank, right, and apply for their mortgage. Everything is done online. So the goal is to really just create this digital experience for people to go through this co-ownership purchase and be able to connect with all the partners. So we have the real estate agents who are going to help the co-buyers look for property that fit co-buyers, right? It may be multifamily. It doesn't have to just be multifamily, but ideally, if you have two families, one family would occupy one unit, the other would occupy the other unit, and they will go 50-50. So, you know, we provide kind of all of the support that you need for these type of transactions. Actually, where I got the idea, I was on a dating site on, I won't say the name of it, but I was fascinated by the algorithm that kind of gave me the options that I wanted, kind of like investor dating, right? Looking, have you ever been at work and there's a coworker and they're talking about buying a house and you're talking about buying a house, and you guys are sharing horror stories and you both have the same goal in mind, right? And then you build up this trust with one another, and that may be the perfect partner.
A variety of scenarios in which, you know, the goals might align, right? So I want to create passive income. I want to build a real estate portfolio. I want I'm a single mom with my family, and you're a single mom with your family. We've known each other forever, so let's buy a home together and raise our, like, there's all kinds of ways to, and reasons to look at co-buying, right? And that's what I love about this platform. It is flexible enough to cover the various scenarios while also taking a lot of the questions and the hurdles out. So, you know, I want to thank everybody for, you know, coming to this with the open mind to learn about it, because hopefully as the panelists are speaking, you're thinking about clients or deals that you could have captured or would capture now with this knowledge, you know, going forward.
Co-ownership is basically when two or more people who are not married to one another jointly purchase a living unit. The co-owners may share in down payment, mortgage payments, or ongoing costs associated with the property. Or maybe one co-owner supplies the entire down payment and the other one furnishes a quality credit score. With co-ownership, there's no limit to how many people you can have on title, so you don't have to be related or married to be on a mortgage together. And some of those benefits are splitting those costs, especially if we're talking affordability. And that includes, utilities and other household maintenance. But it also helps mitigate some of the hurdles of home ownership and increases your chances of loan approval. So buyers can start building equity earlier in life. I get the question a lot, do the buyers have to live together? And that's totally up to the buyers. I've had clients that want to live there because they don't want to be paying rent and also owning a property. It just makes more sense to live there. But then some want to just invest and not live there and rent out their unit and get that cash flow. Or if they all start, they begin this co-ownership with living in a property and there's some type of conflict and one wants to move out, they can also rent out their unit and get that cash flow. So you don't always have to live at the property. This is not new. People are already doing this. I believe in 2017, there were over 2 billion in mortgage originations, dollar amount that was originated for non-married co-buyers, right? So we are already doing this. We're originating these mortgages for people who are not married. I know in my career, I've originated thousands of mortgages for people who weren't married. The lenders don't question the relationship, right? They're looking at the financials. So this is not new. And the perfect example, like you said, is this idea of multi-generational purchases, right? You have multiple generation of families living in a household, all contributing toward rent, when they could be all getting together and contributing toward a mortgage and helping to build that family wealth together. So I think that's the perfect example of, a situation where everybody's renting, they can kind of chip in and buy.
This is about removing hurdles, making it easier, having a platform that simplifies, right? So if you're an agent, all the ins and outs, but you do want to be able to facilitate deals, to find additional deals. How do we do that? What's the trend that's happening in the millennial homebuyer space, or the Gen X homebuyer space, or the Gen whatever's after millennial, right? All these generations that are challenging the existing way of thinking about buying real estate. They're doing it differently. They're having to be nimble because of the economic times that they have lived through and that they anticipate living through. So, how are we going to serve them better given the behaviors we're already seeing in the marketplace?
I think this is a game changer. I think it's an industry game changer, particularly for salespeople, right? Whether your specialty is listing property or working directly with buyers. Every agent has their thing that they do. And either way, it's a game changer, because everything that Nikki and Sabine said is completely accurate, right? There are challenges that we're facing in the market. And as agents, we're on the ground every day experiencing these challenges. As interest rates have shifted and pricing has shifted, so have our deals, right? Like some of them just shifted away. So, and what could have been different, right? If you actually had something like Pairgap, because what it also does, it says it gives more liquidity, I believe, right? Because when you have more than one person working together to make something happen, that's when magic really occurs, right? So if you have our typical buyers right now are saying, oh my God, interest rates are shifting up, and they're trying to do this. Maybe it's just a couple, maybe it's a single person trying to do home ownership, and they're looking at a small pot of assets. But if you have multiple people, which means they also have multiple resources, right? They can look at those multiple resources and kind of bring it back together. We've lost deals in this shifting market. And I think that if we had something like Pairgap, a lot of those deals would still be on the table. More importantly, I think when a real estate agent is ready to present to a buyer, they may come across buyers. We come across buyers all the time, and you doing lending, that say, they really want to buy, but they're just not ready. And oftentimes the ready means They just don't have enough money, or they don't make enough income right now, even though they may have a great job, stable income. And it's depending on what market they're living in or what market they want to purchase in, they just may not be, purchase ready at this time. Pairgap totally shifts that around and says, okay, well, let me show you how you can be, right? And let's work together to get you there. And also, if you have agents that are working with sellers, and if you're talking to a seller that wants to, you're saying to them, hey, listen, they want to list their property, what's going to differentiate you from everyone else? Being able to present Pairgap as where you go to get qualified buyers, because they can only be in Pairgap if they're qualified buyers, right? Like they have to have gone through the processes, and Nikki will talk about that later. So if they haven't gone through those processes, they're guaranteed pretty much, right? I don't want to say guaranteed because that's a strong word and something, not Pairgap. but I think I'm pretty close on that, right, Nikki? To say that they're ready. So if you're a listing agent and you're talking to this seller about, hey, listen, I'm going to bring you the best of the best, buyers, and we're going to bring people to the table that can purchase this home and get you to the closing table. Pairgap is like a deal changer, in my opinion. I was thinking about this thing, like when I met Nikki, we were brought together by a mutual friend, and then we found out that Sabine was a mutual friend, right? It was just, it was kismet. And when it happened, I said, Nikki, oh my God, I've been thinking about this for like 5 or 6 years, and people thought I was crazy, right? I think this is phenomenal. And it's going to change the game if real estate professionals jump in, get a hold of it, understand what it is, and just run with it.
I just want to share a couple of quick statistics that I've come across. And of course, we all have our anecdotal stories of, I've got a roommate, why not buy a place instead of rent together, right? So the one interesting thing I saw was that 43% of millennials are considering purchasing an investment property rather than a primary residence first. And it has to do with they're living their best life in the urban centers, but can't necessarily afford to buy in the urban center there, but they don't want to miss out on the idea of home ownership or the passive income that can come from rental properties. So they're thinking about buying a rental property. So why not go in half and half, go Dutch, as you say, on a rental property with someone that they know or someone who has a shared vision to do that? That's one thing. The other is, how many millennials live with a roommate already? And the fact that this way of buying homes has been going on for a while. And now what we're doing here today is sharing some of the best practices that can make it an opportunity for us to grow our business and to serve our existing clients who are buying properties this way even better. But I want to bring in Sabine to this, and maybe this is a question for both you and Sabine. For you, Nikki and Sabine, what would you guys say to folks who are a little bit apprehensive about buying real estate together? Maybe they have grown up together. They know each other for years and years, but now they're, buying real estate is different than splitting the bill at dinner, right? So what would you say to folks that are thinking about this as a concept, but maybe are a little leery about it?
Was that for Sabine or me?
I could
Either.
I could jump in unless you have something, Nikki. So I was going to say that, rightfully so, right? So it's right to want to protect what you built. It's right to want to protect your credit and your personal interests. But there are a number of ways when we plan ahead that you can sort of, protect yourself and protect your interests. One way is to do that with an agreement, right? And Nikki has coined a phrase of the real estate prenup, which is basically a contract agreement that really helps you think through and walk through what are some of the issues that may arise in the, throughout this relationship or this, agreement, because it's sort of like a marriage. I mean, you're putting a lot on the line and collaborating with people, but you can do it in a safe way. So with this, you're kind of going through, okay, what happens if one of us wants to sell? What happens if someone stops paying? What happens if someone unfortunately passes away? And we kind of walk through all of these different things. And not only that, it helps the individuals to think about these things now, because if you can't get on the same page now, then you're certainly not going to be on the same page later on, right? And so, in addition to that, there are a number of other things such as, having a business entity, involved with protecting this relationship, like an LLC, or having, each party having their sort of estate plan in place where they know what happens in the case of a death and their interest is not sort of like left out there. It allows each party to sort of cover all of the things that can come up in the future and protect themselves, having thought it through and positioned themselves correctly. You want to add something, Nikki, that I may have forgotten?
Yeah, definitely. I mean, listen, where there's reward, there's risk. So how you decide or how buyers decide to split equity and ownership is between them. So what's determined to be fair and equitable for one person may not be for the other. So the co-buyers make their own decisions in that, and how that equity is split. But in the simplest case, each co-owner contributes equally toward the property in terms of finances or non-financial contributions. This makes the decision of how equity is split more straightforward. And as Sabine said, with any business arrangement, partnership, prenuptial agreement, or merger and acquisition, co-ownership calls for its own rules and governing rules, right? So the real estate prenup helps buyers to minimize their loss, limit exposure, resolve conflict, and really just to have a peace of mind and protect those personal relationships. So I often compare business partnership to marriage because there's so many similarities. Both are big, life-changing relationships that require mutual trust and respect. They both involve money. They both require conscious choice every day to continue working toward a common goal. So, protection is important, and that's probably one of the biggest questions that I'm asked.
Yes. And thank you both for sharing that and for giving that visual and that comparison, and I want to bring it back to the personal just for a second, right? Because we're going to be talking about legal protections and different ways that we can help people buy homes, and bring some best practices to them to help protect themselves. But I want to bring it back to the personal because I don't want to get lost in the jargon. We're talking about sometimes it's mother and daughter who have been renting and living together. And instead of continuing to rent and watching the rent rise every time they have to renew their lease, instead, they decide they want to buy a 2-family home together or a 3-family and rent out the 3rd unit, right? And create some rental income. These are roommates, cousins, friends who've grown up together and have been renting their whole lives and want to continue to rent, by the way, but they want to create some rental income and they want to go into business together without quitting their day job. So they buy real estate to create some rental income for themselves, right? I'm talking about people that amongst your clients or amongst your friends and your family who would potentially look at this way of buying property and us positioning ourselves in a way that can help.
And Jaqueline, sorry, there was a delay. Let me just say that this is not new. People are already doing this. I believe in 2017, there were over $2 billion in mortgage originations, dollar amount, that was originated for non-married co-buyers, right? So we are already doing this. We're originating these mortgages for people who are not married. I know in my career, I've originated thousands of mortgages for people who weren't married. The lenders don't question the relationship, right? They're looking at the financials. So this is not new. And the perfect example, like you said, is this idea of multi-generational purchases, right? You have multiple generation of families living in a household, all contributing toward rent, when they could be all getting together and contributing toward a mortgage and helping to build that family wealth together. So I think that's the perfect example of, a situation where everybody's renting, you know, they can kind of chip in and buy and be able to build that wealth.
Sabine, let me ask you a question, a follow-up question. You mentioned before one of the tools to protect, you know, when it comes down to money, right? So maybe it's a multi-generational household or whatever the scenario is, two people want to buy together, and you were saying that you could purchase in an LLC. First of all, what's an LLC and why might it be better than purchasing the property as individuals?
That's a great question. So an LLC is a limited liability company, right? So it's basically a type of business entity, which many in real estate probably are familiar with, that allows each of the members who are the owners to limit their liability. So if something were to happen within the entity or to the property that's within the entity, the individuals themselves don't become personally liable, right? And so being able to purchase, you know, in a co-buying situation in an LLC allows each other to limit their personal liability. One way being for credit purposes. So if the entity is able to finance the mortgage for credit purposes, they get to protect themselves. If someone gets into, God forbid, a car accident and something fatal happens and they have all this liability, their asset is protected. So each owner has the ability to protect that particular property, that investment that they've have invested in.
This is about removing hurdles, making it easier, having a platform that simplifies, right? So if you're an agent, all the ins and outs, but you do want to be able to facilitate deals, to find additional deals. You know, how do we do that? What's the trend that's happening in the millennial home buyer space or the Gen X home buyer space or the Gen whatever's after millennial, right? All these generations that are challenging the existing way of thinking about buying real estate. They're doing it differently. They're having to be nimble because of the economic times that they have lived through and that they anticipate living through. So, you know, how are we going to serve them better given the behaviors we're already seeing in the marketplace, right? And speaking of removing hurdles, I want to bring Jason into the conversation as well, because you know, when we've got co-buyers who are pooling resources, they're, you know, as much as they're going to pool together, they're probably not going to pool the entire purchase price and closing costs together. So some bank money is going to be needed, right? We're going to need a lender. So I'd like to talk about how the lenders, Chase as an example, approach co-buying, and what would a real estate professional or a home buyer need to know about it from a lender perspective? Jason.
So from a lender perspective, in all honesty, it's business as usual. That, as Nikki mentioned, this stuff is already happening. It's been happening for years. People have been co-owning and co-buying together for years. What this platform does is it helps match people together who are interested in doing this. Or let's just say a borrower is unable to do it on their own. We now have this platform where we're able to match people up, as Nikki mentioned, by what specifications, neighborhood, you know, that type of thing. In terms of the whole pre-approval process, again, business as usual. We're really looking at the two individuals pooling their resources together, combined income, assets, and if there's some kind of agreement beforehand as to how much one borrower is willing to put in terms of down payment versus another, you just tell us as we're getting you pre-approved, and we'll arrange the pre-approval as you specify it. You know, as long as it's within whatever legally binding document you have when you're getting together to do the co-ownership. So really, there's no difference in terms of what we're looking at from a lender perspective. The only difference that we would have here at Chase is that we do have the capability, unlike a lot of banks, to close in an LLC. It's not something that every bank has the ability to do. And we can touch on that a little bit later, but that would be the only difference in terms of the legal aspect and how that's reviewed.
So let me touch on that, right? Because on the mortgage side, it's a personal residential mortgage loan, and yet the property is being purchased by a business. So how is that, like, does the bank, do we get confused? Is it personal? Is it business?
So that's actually why most lenders will not lend and put title in an LLC, because of the fact that it's a corporation. At the end of the day, it's a business entity. So Chase, really what we do is we make an exception and we'll say, hey, we can definitely close this in an LLC as long as you can provide some satisfactory paperwork. And I have that list actually. Let me see if I can pull it up. But not to go into too many specifics. We want to make sure that there's a state filed or recorded articles of organization. That's with the state, right? Like we're going to be asking for some of this paperwork from the LLC. Certificates of good standing issued by the state within the last 60 days. We also want to make sure that whatever LLC you have, don't go and report negative income on your tax returns for that LLC, right? You want to make sure it's in good standing. LLC resolution forms. There's a lot of different things that we'll ask for, but the cool part about that too is if you have the LLC with Chase on the business side, your Chase business banker can pull up all of this stuff to make your life easy. So we can have that stuff up front and it wouldn't even delay any of the process in terms of getting this exception done. But we have the ability to close in an LLC. We have the ability to close in a revocable trust. We actually have the ability to close in certain cases in certain irrevocable trusts, but that's really rare. So I'm not going to touch upon that. But we have the capability to do that, and a lot of places don't, because of the fact that it is considered a business in terms of ownership. However, I do want to stress the mortgage note itself, an actual human being, an individual has to actually sign and record that mortgage note. It is a promise to repay the bank. The bank is not going to allow a corporation to sign that promise to repay that debt back. So it has to be the individuals as part of the transaction, but we can close in an LLC or a trust to answer the question.
Wait, can I just add to Jason? You talk about, thinking of it like a business, right? This idea of having a business. And one of the things that I never used to do. So I've been a property owner for almost 20 years, and it was rental property when I first bought it, but I never looked at it as a business, right? I looked at it as like a side hustle. And it wasn't until I left corporate where I had to kind of just reconfigure everything and turn my properties into a business and start running it like a business. So I like the fact that you talked about, opening it in an LLC. The property becomes the business and the partners become partners in business. And this is no different from any other business partnership, right? There's protections there. There's insurance in case of default. I remember Sabine and I last week, we had a conversation about what she tells people when they ask about these co-ownership deals, because it's like, well, what if somebody defaults, right? Well, what if, somebody loses their job? And I loved Sabine's answer. So Sabine, if you remember, I want you to say it the way you said it, because a light bulb went off in my head, because ideally you're going into this transaction because you can't afford it on your own, but maybe somewhere down the line you create enough cash flow where you can afford it on your own. But Sabine, I'll let you kind of.
Yeah, I think what we were talking about, Nikki, I was saying how we have a particular clause in this real estate prenup where we have, if someone is unable to afford the property any longer or cannot or falls behind on payments or is not meeting their obligations, they start to lose equity in the property equal to whatever they're falling behind. So say someone else has to, the partner has to pick up the slack or has to step in and now continue to pay this mortgage, which they will have to, they're able to now regain or earn more of the ownership within the property. So there's incentive on both sides. Like, okay, if I have to now pick up the slack, I'm going to earn more. And if the other person is not, they're going to start to lose it. So you don't have to worry about, oh my God, this person's not paying. If I don't pay, then my credit's going to, no, now you're going to earn more of the property and they'll just lose their interest, eventually if this continues forever.
And I think that's just the way we think about things, right? We think about the negative things first instead of, hey, I get a bigger slice of the pie, right? So I thought that was, a great answer that you gave.
And I just want to piggyback on that is that it plays into the whole sort of new way of thinking we're talking about, right? Like the shared economy, the, people wanting the ease of these sort of transactions. So what Pairgap is doing is sort of taking away the due diligence aspect, making sure that that's done for the parties and they can easily now transact and go into these relationships and be protected at the same time.
And think about it like a dating site, right? That's actually where I got the idea. I was on a dating site on, I won't say the name of it, but I was fascinated by the algorithm that kind of gave me the options that I wanted, right? I put in in my profile what I wanted, and that's all that kind of that became an option for me. And so, it's kind of like investor dating, right? Have you ever been at work and there's a coworker and they're talking about buying a house and you're talking about buying a house and you guys are sharing horror stories and you both have the same goal in mind, right? And then you build up this trust with one another, and that may be the perfect partner, right? Right in front of our face.
And, I can think of a variety of scenarios in which, the goals might align, right? So I want to create passive income. I want to build a real estate portfolio. I want I'm a single mom with my family and you're a single mom with your family. We've known each other forever. So let's buy a home together and raise there's all kinds of ways and reasons to look at co-buying, right? And that's what I love about this platform. It is flexible enough to cover the various scenarios while also taking a lot of the questions and the hurdles out. So, I want to thank everybody for coming to this with the open mind to learn about it, because hopefully as the panelists are speaking, you're thinking about clients or deals that you could have captured or would capture now with this knowledge, going forward. I want to, speaking of the different scenarios, right? And just